1 week in already. Good afternoon, Facebook. Super excited to bring you our weekly Queens market update with a friend of mine and amazing loan officer, Peter Collins from Cross Country Mortgage. So, we obviously always want to improve these updates, make them as accurate as possible. So first I want to thank my right hand, Humaira, for putting this together. She put a lot of effort in putting these reports. We're going to break it down even more this week. We're going to look at single family homes, multifamily homes, and co-ops and condos. We're going to compare last 2 weeks, and we're going to compare the last week to the week a year before, just to really get an idea of what's happening in the Queens market. Price-wise, we'll probably need another couple of weeks to really see an impact, right? Because it takes time for the prices to reflect. So we don't see much in the prices. So let's start with the first slide. Perfect. So we'll start with co-op and condos, Queens only, and we're looking at last 2 weeks versus a year ago. Okay, so the week of April 15 through the 21st, 21 new co-ops and condos had hit the market in Queens. When last week, from the 22nd to the 28th, 27 apartments had come on the market. So we got a slight increase of 6 more places, but again, not even close to what a typical spring market looks like in Queens. Last year at this time, it was 89. So when you look at the number wise, we operating somewhere a little over at 30%, right? So that means 70% of the homeowners are still withholding from putting the properties on the market. On the contract, we've got 23, the first week, the 15th through the 21st. Look at this, same amount of contract, 23. And last year, only 4. This is amazing, right? So last year, in the week of 22nd through the 28th, only 4 apartments had gotten contract in Queens. And these last 2 weeks during COVID, 23, right? So that's a great, again, sign of people moving forward. Sellers and buyers are not stopping from accomplishing their goals and their dreams, and they're moving forward with purchasing and selling apartments, okay? Now, sold, we've had 12, 17, and 61. So that's a big change again, huge number. So obviously less places have closed. And again, there might be a cause of, the process being delayed, the mortgages taking a little longer, right? The board approvals are not happening now, right? Some of the buildings, the board approvals are not happening. Interviews are not being done, right? So there might be a cause as well. Back on the market, good news, the week of 15 through the 21st, 5 apartments came back on the market, while last week only 1. Right? A year ago, none. So that's a good sign. And then withdrawals had gone down slightly as well. The week before, 28 homeowners have decided to take the property off the market, while last week only 20, right? Comparing to last year, it was 10. So we're still obviously up in terms of homeowners taking off their apartments, and we have apartments coming back on the market due to most probably not getting the financing, okay? So that's your quick snapshot for co-ops and condos. Let's move on to the next one. Peter, any questions? So far, so good?
Yeah.
Perfect. So now we're gonna look at single family homes, right? We really wanted to break it down, and Humaira did a great job over here. So single family homes, new listings, 34 new listings a week before. Last week, 21. So the inventory of single family homes actually decreased by 13 homes. And comparing to last year, we're operating on pretty much 20%, right? 106 new single family homes came on the market the week of 2019. So again, that means out of 10 homeowners, only 2 of them are actually going on the market, right? Only 2 of them are going on the market. So those are the ones that they really motivated. They're really serious. They really have to make the move. Again, relocating, downsizing, moving close to the family, whatever the case may be. Contracts. We've had 12 last week, and we've had 16. No, I'm sorry, at 12 the week of 15 through the 21st, and 16 last week. So that's a nice increase of 4 new contracts. So again, it's not numbers where we want to see them, but we see homeowners obviously buying and buyers are selling, right? So they are moving into contracts. We've got sold 16 versus 29 versus 43. So nice to see that there were almost double the number of closings from the week before. Back on the market, pretty much the same, 9 a week before, last week 10, none last year, and we got withdrawals 14 week before, 10 last week, and 7 the year before. So pretty much the same team, right? So far, what we see, and we're gonna look at the last slide and we can recap. Let's go to the last slide, Humera. Perfect. Multifamilies, right? Very popular in Queens. We've got 34 the week before that hit the market. We've got 15 this week. So again, less inventory coming on the market, third week of April versus the second week of April, right? Even like the single family, a little bit co-ops had an increase in inventory. But again, comparing to last year, 83, not even close, right? Where the typical spring market for multifamilies should be. On the contracts, we had 7 the week before, 6 last week, so pretty much the same amount, right? And last year was the same number. We've got 4 that closed the week before. We had 11 that closed the last week, 32 a year before. Back on the market, 7, 4, withdraws 6, 10, and 4, right? So Peter, if I recap this, right, we can stop sharing these screens, and we're going to share with you guys all these screens via all the social media. We're going to put them on Instagram, LinkedIn, Facebook, and everywhere, so you can look into those. And if you want to know about your particular neighborhood, right, if you want to know about, let's say, Astoria, Jamaica, Briarwood, right, just reach out to us. We can give you exact numbers on particular neighborhoods as well. But based on what I see is people are moving forward. People are transacting, right? Yeah, it's nowhere close to the spring market, right? But things are definitely moving. In terms of the inventory, it's very, very tight, right? I think we're operating on about 20% of the expected spring market fever. I would say about 2 out of the 10 homeowners are really putting the home on the market now. Everybody kind of waiting to see what happens, right? Shelter in place till the 15th. We've got 2 more weeks, right? So people want to see. So there's going to be a huge urge of properties once things opens up. Any questions about what we have gone through?
Well, no questions of what you went through, but 2 things I want to just bring up. It's interesting. You and I had something this week, right? This gentleman who there were multiple, right, on the 2 family.
I didn't give you an update. We got an accepted offer last night.
Wow.
We had to go $10,000 over the asking price.
This is what I wanted to bring up with everybody. Because
So let me tell you the story in a nutshell. So we obviously look at these updates every day. We work with this great Marine who's looking to buy his first 2-family property. Property hit the market on Tuesday. We saw it on Tuesday. We were able to get him in on Wednesday. On, I think, Friday, we placed an offer after consulting with you, the monthly payments and the rates and everything. We're going back and forth, and we end up getting an accepted offer last night. We went $10,000 over the asking price, and actually they just probably finished the inspection. And we're looking to sign the contract in the next couple of days. So things are moving. Things are not moving. There's less buyers, there's less homes. But those buyers, they know what they want. They've got income. They've got employment. They're moving as fast as we used to move literally a couple of months ago. So what I would say had changed. It's not really the speed of the transaction. It's just the number of buyers and number of sellers in the marketplace.
Gotcha.
Right. we're working on another offer for an apartment in Jackson Heights, beautiful condo that should be coming in today, right? Another couple of offers out in Long Island. So things are definitely moving. But instead of us working with 20 buyers at the same time, we're working with only 8, right? Because the most important thing is the employment.
Yep.
Because we all know the rates are low. We all know there's not too many buyers in the market, right? We all know the homeowners who are willing to show, they definitely motivated. They might be slightly more flexible on the price, right? So now you're getting a lower rate, you're getting less buyers to compete with, and you're getting motivated, flexible sellers. Win-win.
Yep.
Win-win situation. But that's from you on the real estate end. Can't wait to see what did you share with us from the mortgages for this week.
Very incredible week. I'll tell you. So let me share my screen. So you know, a few slides that I'm going to show you guys, right? So Freddie Mac, right? Many people have heard of Freddie Mac, right? Is the Federal Home Loan Mortgage Corporation. Which is known as a government-sponsored enterprise, started in around 1970, created in 1970, and in Virginia. And this is interesting. Freddie Mac is ranked, or was ranked in 2018 as the number 38th position in Fortune 500 list of largest United States corporations by total revenue. Very interesting. Isn't that interesting? But you could get that because they're holding,
they buy all the loans
of mortgages, right? So let me show you guys how the rates have looked over the last, I did 1 year, I did 5 years, and then since Freddie Mac has been reporting this, I think back in 1971. So let me show you, let me share my screen here. Whoops.
Just play. Hit play.
Play. Okay. So a little bit, right? Freddie Mac, I was just telling you about that. Created in 1970. And Freddie, you know, we know by Freddie and Fannie and Ginnie, right? Fannie Mae, Ginnie Mae, and Freddie Mac. So here we go. So, and these, how Freddie Mac showed the mortgage rates, right? You see at the bottom of the screen, it's 125 lenders nationwide come up with these average national mortgage rates, right? So, you know, people always ask me, what's the rate? What's the rate? What's the rate? And you know,
I think what's important, what I see over here, P, you see in March what happened. So they were actually rising, right? The rates were actually going up. They were on their way. They were on the way to high 3s, and then we got
when the Fed lowered
unwanted visitor, Mr. COVID-19, and they plummeted. They plummeted all the way to like low 3s.
And remember when the Fed dropped the rate to 0?
Yes.
You know when that happened?
It's been good for 5 weeks, I think, already.
Right around March, right around that spike. It's so interesting because you know, I get right as soon as that happened, when the Fed dropped it went to 0.
You talk about the spike in mid-April, going up a little bit and then going down again. Is that what you're talking about?
Spike here is not mid-April. This is right. So this spike here is, we're seeing it, and this is in March, right? And,
yeah,
actually, I should know, but it appears like right after my point is that the Fed raising or decreasing the interest rate does not their rate does not necessarily have a direct impact on mortgage rates, right? So
the bottom line is the rates are the lowest since May of 2019, as far as we can see so far.
Right. So now this is, I'm showing you this chart is 1 year, right? Now let's take a look at the 5 year. So here, look at the 5 year. In 5 years, we're lower than we've ever been, right? I can't get my mouse to mouse over, but you can see, right?
Yeah, you can see it's very clear. Very clear.
Very clearly what's happening here.
Lowest in the last 5 years. Wow.
5 years. And now let's go to since 1970, 71, right? We had that big jump.
Look in 80s, over 17.5%.
Crazy, huh?
Amazing.
Crazy. And now, yes, we are at the lowest recorded that Freddie's been, as long as Freddie's been doing this, right?
Wow.
Just pretty amazing. So let me just move this over here.
So I'm sure you do probably a lot of refinances these days, huh?
Yes, refinance.
Yeah, I just spoke to one of our clients earlier today, and he was very happy with you saving him $600 a month. Very, very happy with that.
You know, right? Nothing out of pocket, right? The beautiful thing,
$600 a month. That's amazing.
The beautiful thing when you refinance is, hopefully, right? Most clients, I want to make sure that they are not paying anything out of pocket. If anything, I want to give them back money, right? Because we get with a non-cash out refining, we can give you up to 2,000. You can get up to 2,000 back. But in a cash out refinance, we give you, whatever the DTI will work with. But here's some of the articles that I found yesterday, right from the Washington Post, ABC News, MarketWatch.com. Mortgage rates sink to all-time lows and may be headed lower.
Wow.
Lower.
Why not? Let's go.
What's that?
Let's go.
I mean, it's incredible. I mean, and let me say something. This is sort of good news. I mean, it's great news for people who are refinancing and buying, right? But it's
good news for everybody. It's good news for the sellers as well, right?
Yeah.
Because what happens is with the lower rate, it increases the buyer's buying power, right? Yes. So the buyers actually can now buy a little more expensive homes, and they can now make that little high offer, which they was not able to maybe make a couple of months ago, right?
Yes.
Just stop sharing if you're done at the bottom, or unless you got more. So I think it's a win-win. I think it's a win-win for everybody, and I think it's really going to help the economy get back into action. Hopefully, very, very soon. Yeah. But again, like we see activities. We see a lot of activities in Queens now.
Yep. And a couple of things I just wanted to tell people is, get ready, prepare, right? So if you're looking to buy, or you know that, because things are gonna, right? We've spoken about this. Things are gonna open up. So get ready if you're looking to buy, or you're thinking of buying. Maybe not this minute, but when things open up, pay down your debt, clean up your credit, and save your money, right? And don't try not to, quit your job, because you want to be prepared, because there's going to be good deals. There's going to be good deals out there, and it's going to be a good time to buy. So that's it. And then I just had another slide that basically tells people what you need to prepare. But I don't think, they're just the borrowed documents.
Yeah, you can show it. Go ahead.
Okay. So yeah, so for people, many people know this, some people don't, but here are the documents that you want to prepare when you're getting either really pre-approved, because that's the first step of the process, right? So you want to show if you're whether you're self-employed or not, 2 years tax returns, personal and business, 2 years W-2s if you're salaried, 30 days worth of pay stubs, 2 months of bank statements, retirement statements if you're using it, a divorce decree if you were divorced, or separation agreement, child support documentation if that applies to you, and proof of sale of any other properties that you may have owned. Income, we have a lot of different loan programs, obviously, although we've tightened up on a lot of them right now. And we've gotten more, all the banks have gotten more conservative. Self-employment, if you have commission, 1099s, corporate tax returns. We want to see that for the last 2 years. Any bonus income, again, we're going to average that over the last 2 years. Assets, bank, we always go back. A lot of people don't know. They ask me, how far do you guys go back? How long do I have to have the money in the bank? 60 days. That's what we use in our business, right? 60 days of assets. 60 days, we look back from the day that you sign the check, the day that you sign a check when you're buying a property, we're going back.
In other words, when you sign a contract and you put the contract money down, correct?
Thank you for clarifying. Yes. So the EMD, the earnest money deposit, when you're signing a contract and you put that down payment, we're going back. We're going to ask you to go back 60 days. And that's the same thing if you're using money from a retirement account or an investment account. We're going to go back 60 days. Gifts. Quick note on gifts. If you're going to get a gift, if it's a conventional loan and it's not a conventional loan, all we need to see is a canceled check. Someone gives you a check, a family member, they give you a check, you deposit that check, we've got to see the canceled check. If it's an FHA loan or a Sony Mae loan, FHA or Sony Mae, we want to go to the donor, and this comes up, right? You have to show the donor's account, right? So we got to go back 30 days for a donor, a gift giver, right? And the idea is that you or somebody didn't give that gift donor cash and then they turned around and wrote you a check. So FHA, Sony Mae, they want to go back 30 days on the gift giver.
A little more conservative.
A little more conservative. It's a little more conservative. And then large deposits. There's the specific rulings on large deposits. I don't actually know it off the top of my head, and I should, but typically I say to people, if you're depositing something over $1,000 and you're not in a cash business, and it's either cash or cash you should stay away from unless you're in a cash business, right? But if you're depositing money that's not coming from a known source, such as your paycheck or such as child support or such as an IRS refund, then you're going to have to document that. You're going to have to show proof of whatever that was given to you. You know what? I'm going to stop here because I feel like I'm going a little long. It's good. It's good.
You know what we can do is, if you can just send me this PDF and we'll share it in the comments, right?
Sure.
So anybody who likes, they can just download it, and I'm gonna put your information at the bottom as well, so people can reach out to you if they have any questions about these mortgage basics. Walk in prepare.
Great. All right, so that's really it. But again, it's a good time in the mortgage business for the most part, right? If you're doing
stop sharing.
Qualify. Stop sharing?
Yeah.
Hold on one second. Stop share. Okay.
Yeah.
Thank you, sir. So, if you're working, right, and you have money.
That's the bottom line. That's the bottom line, right? Employment, are you safely employed for next few years? Then it's definitely a great time to get into real estate. We see the low rates, we see low competition.
Yes.
Not a question I ask.
Yeah.
Any closing thoughts?
No, I just I feel that things, I feel like things are going in, even in the numbers that you showed. Right, the numbers that you were showing, there's yes, everything's small and low, but it's happened. There's movement. You know what I mean? I feel like, I don't know. Spring is here. It's my favorite. It's my favorite season of the year. The weather's changing and turning, and I feel like we're going to have a turn. I feel like the turn is coming. Yes, we may have to live a little more conservatively. Yes, we may have to, have social distancing for a while. But I feel like, there's good things happening. There's good things happening.
Thank you, brother. Always great to have you.
Thank you.
Looking forward to next week, guys. Here you have it in a nutshell. We'll talk to you all next week. Enjoy the weekend and stay all safe. Bye now.